day. Ira Epstein with your metals market wrap-up for this Thursday, October 31st, 2019, about 3:45 in the afternoon, Central Daylight Time. Our time zone's going to change over the weekend. I think we fall back. Today was a risk-off day. What do I mean by that? I mean, traders started buying the metal markets, the gold and the silver. They dumped the stock indices today, opposite of yesterday. They bought bonds and notes in pretty big manner, drove them higher. They dropped down the energy market. The dollar fell, and the Japanese yen had a rather strong day. I call that, and most traders would, the market moved into a risk-off mentality. Now, risk-on is when you're buying the stock market, you're dumping generally the bonds and the notes, the yen goes down, so on and so forth. Not getting that. I think it was a combination of the House vote this morning to proceed with the impeachment inquiry. They have yet to reach an impeachment vote, but they're at the inquiry, and that was a big event. It's historic. So now we've got the fourth president that's got this going on. The next part that happened was there was an article in Bloomberg that I think spooked the markets early on when it was a negative article about the Chinese-U.S. trade deal and how that was proceeding, and very big doubts about it getting beyond the phase one if you can get to the phase one. So the grain markets early on dropped on that. They managed to recover late in the day, did some damage to them, but the markets did recover. The stock market recovered nicely off the lows, as you could see. So we'll see if the market has legs to it. But let's go to the gold market. The gold market for the day is back up here at it's up 1570 for the week at 1515.20, clearing these highs right here. We're not through with the week. You lose another $5, $10 tomorrow, and you might be under that still. So while it looks good, it's just a reference point. I'd rather go to the daily chart. And in the daily chart, let me point out where you're stuck. Do you see the high here to the low here? You're stuck in that range, back and forth, going nowhere in a big fashion and whipping traders back and forth as this is going on. The pattern in the market is one of a higher high and a lower low. That is not a trend. This is the chart without that. And some traders say, well, look at how that looks. And I don't know how it looks without a swing line. When I put the swing line on, the market has 5 rules to draw a swing line. I teach them in my charting course. If you want to learn about that, on our website under the word education, it explains everything as to how the course is run. It's 6 hours of videos with the charting software, and then you get to come into the morning videos and so on and learn even more. But lower low, higher high is not a trend. I then look at moving averages, and the market seems to be stuck, I think you'd agree, against this 18-day average. You're just not moving away from the market in any manner whatsoever and lasting in that direction. So I'm going to call it a chop affair, which is going sideways at this point. When I look at the Bollinger Band, you made a run yesterday for the lower band, run today for the higher band, and so far there's been no follow-through either way. Let's assume you follow through to the upside, just for the sake of discussion. If you get up and over this, so what? You've still got the lower low, higher high. Don't get me wrong, it'd still be a powerful move because this market hasn't been able to stay over an upper Bollinger Band for an extremely long period of time. In addition, you've narrowed in the trading way sideways. So like a spring in a pipe, you're building up pressure for the market to go one way or the other. Underneath the market yesterday, I'm sure I would have said first support, lower Bollinger Band, secondary 100-day average, resistance, the 18, and today you went right through yesterday's high and just kept going to the upper band, and you stopped there. These bands, to me, have meaning. They may not to you, they do to me. Momentum is up. So you've got momentum pointing up, the bias is up because you're over the 18-day average, but you're caught in this sideways band. The bulls are waiting to pounce. I can tell you that if they get a reason, it could be the trade deal's not what they thought it was going to be, who knows, the impeachment inquiry, but the bears are also able to restrain this market. You're in a difficult spot right here. In the GLD, it's the same thing. You're caught in these narrow bands, back and forth. I'd rather chase the market when they can show they can stay out of them one way or the other, and I said one way or the other, than be the hero on the block. Because if you thought it was going to stay out over here, you got knocked out. If you went short thinking it's going to break further, you got knocked out. Too difficult. When you come to GDX, the mining stocks, the last rally high was up here, and that high on this chart was 28.18. You broke down, hung around the 18 and the 100-day average, popped up today, and guess where you stopped? Right against that high. Now, the difference on this chart from the others is this is bullish. This has higher lows and a higher high legacy. So until it takes out now the lows of Wednesday, 26.73, I'm in the camp that thinks support's going to be found here, and the possibility is greater to get to the upper Bollinger Band. Here's the negative, because I got to show you the whole thing. You're already overbought. So you've spent energy to get to where you're at. I don't know that it can break out of that sideways action. Difficult time in the gold. The gold-silver ratio continues, in my mind, to favor silver as long as this general tide of the market goes down. This means you need less ounces of silver in a perfect world to get an ounce of gold. No commission, you put it in your shopping cart, you take it to your local store, coin store, whatever that you can convert it with. They're so good to you, they love you, they're just going to take an even swap. That's how many ounces of silver it takes to get to gold. And as you can see, silver has been staying with it. It's had a pattern of higher lows and higher highs, but it too is caught in this sideways action. The fact that you're at the upper Bollinger Band, you should have an upward bias, but that doesn't mean that you're jumping crazy in the market yet. If the market can move out of here, 1835 is one of the resistance points, then you've got this other one, and of course you go back into the 1950 level. I wish I could tell you, hey, this is it, this market looks like it's going. I'm not. What I'm saying is going home. The bulls have control. Higher lows, higher highs, not overbought, but in a resistance area in the market. And you'll probably close, well, you're going to be under this 1811 area at the very settlement. I looked before I did this. We then get to the copper. And this is how copper looked coming in. You still had an embedded reading. The market, though, had thrown out a warning sign. On Tuesday, you had an outside day up. Yesterday, you broke through that low. When you do that, you'll hear me often say, I think price is trying to get to the closest of a moving average. In this case, to be the 100-day. It's the closest. It's over the red at this point. Or the Bollinger Band if it's under it, but that's way down here. So it would be up here. I don't know what's going to happen next. Bang. Right down to it. Now the market's at a neutral spot. If it takes out right here, 260, I think that's 261.45, then what the market's done is it's broken its uptrend because it'll have broken the pattern of higher lows, higher highs. You're in a support zone. There's another problem in copper. You lost the embedded reading. If you take a look back here, you had kept it. So that's not to say the pros didn't buy this here. Generally, when you have an embedded reading, they'll reach down for a key average. But losing that reading, I think a lot of them probably threw in the towel, and they'll wait and see how it wants to develop from here. I still have this market on the close with a bullish bias. It looks like the settlement's over the 18. The pattern's higher lows, higher highs, but you're overbought now. I think the smart money's coming out of the copper or out. In the platinum market, still in an uptrend, and if we take a look at yesterday's action, higher lows, higher highs, but overbought. That doesn't mean you can't work higher. The number you don't want to take out is 918.40, but you're overbought. I don't think the pros are reaching in this market. It's that simple. Yet it went up, hit the Bollinger Band, and stopped that first resistance point. And in the Palladium, if we look at the break today, this was the last break low, 1749.40. Then the market goes up, hits 1799.20, right into the upper Bollinger Band. You know what I'm going to say. I'm going to say this yesterday. I think the pros took money off the table. Today's break low is 1748.70. It took this out. I don't know that they're hanging in there, but this pattern is still ruling the day. Now lose the embedded reading, and then I think price and the 18-day average have a shot at each other. The 100-day is way down here, so that's not the play. But recently, each break of this to the 18-day average has produced support. I have no reason to think it's any different or going to stay different, but I do think this market lost its appeal versus the platinum, and that's often the spread. This is still the best producing and best performing metal of the year. It is up like 40 some odd percent for the year. In the dollar index, all you did is you had a short covering rally from here. The market lost its embedded reading. Often that leads to price in the 18-day average making a run at each other because the 100 days under the market when that occurred. You got to that yesterday, fell back to the support of the 100-day, and today you got under it. Problem is, oversold into a resistance zone. I'd like to see more action there as a chartist before anything really goes on big. Pivot points. This morning in my morning subscriber video, I spent some time on this because Coppe had a setup with losing an embedded reading and where the market was. And I was showing traders how I thought that might work out. So if you're interested in learning about pivot points, I've put together a 3-part video series, and it's free. All you need to do is go to our website. You're going to see Ira's free offerings. Click on it, choose the offerings you want, we'll put it in your hand. But you're going to learn the formula. I'm not expecting you to learn that anything more that you understand it. Got it? Your charting service is going to be able to plot that for you. Then I show you the colors I like to use and why I'm using them. And I'm the first to tell you, some pivot points, I use them to out from the pivot. The pivot's the white line, so I use a resistance point 1 and 2 and then support lines the other way. That's how I like to look at the marketplace, and I'll show you how I plot them and tie stochastics into it. Interested? All you need to do is go to the website. You can click up here. That'll take you right there as well, as I say that. I'm Ira Epstein. I'm heading out early today. It is snowing. I don't want to fight traffic on the way home. You have a good day.